Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your weekly technical analysis of the Chicago soybean complex.
Hello and welcome. Now, before we start, I just want to let you know that no AI, that is artificial intelligence, was ever used in the composition, production or recognition of any of the patterns, levels, analysis, or any related items on these, my charts. This was all my own original work, as I think you deserve to have that. So with that, Chicago soybeans. I think it's fair to say that this commodity has been frustrating me for a while. Thankfully, that now seems to be coming to an end. However, as I have said over many weeks, it was only when I looked at my longer-term monthly charts that I was able to decipher a little of what had been going on and to give credit and warnings where they were due. So if we look at my longer-term monthly charts, we can see that the action since as far back as the low seen in August last year till now last month has built a sideways action. I noticed this action 33 weeks ago, and I'll expand on that part shortly, but I just wished you to see that this sideways action looks like it's coming to an end, as we seem to be establishing a basing action based around what could be seen as a possible triple bottom formed over August 24 to August 25. You'll also note that we are set up for a possible monthly key reversal up this month. Now, I should caution you on the possibility of a false break higher, but as seems likely it is now, then we have but as it seems like it is now that we have a primary target on this longer term chart up in the 1189 area, with a secondary harder to reach target in the 1224 area. Back to my daily charts, and also 33 weeks ago, I highlighted a bright pink July 24 to date rectangle pattern, which you can see on my daily chart, and it's currently 962 3/4 to 1103 3/4. This pattern had been operational until this week. This past Tuesday, we punched up through the upper pink trend line, though we did not stabilize over it, and today we have done the same with what looks like a possible combined key reversal up and bullish engulfing pattern. Well, right now, this is the pattern that has been formed by the actions I mentioned in my longer term chart. Within this very large rectangle, I have described over recent weeks a mid-August to date head and shoulders top. I freely have admitted this was not a great looking pattern, though I still will give it some credit. What is important is, as I said last week, and I quote, that it is increasingly looking like a head and shoulders continuation pattern now, end of quote. This now seems to be the case after this week's actions. Additionally, we can now look at the whole August to date action as a possible bullish halfway hesitation. If that is to be the case, and it looks like it is, then the primary target has already been achieved, and that a secondary target is up in the 1120 to 1125 area and is on the cards. I've not marked the secondary target on my daily chart as we are so close to it now. We're so close, we came almost close to and reaching it today. We're so close to it right now. Next, I had marked on my daily chart the possibility of looking at the August to October actions being a possible double bottom. This pattern has happened. They have reached both the primary and secondary targets for this pattern already as well. Finally, last Thursday, the 23rd, we had a bow tie formation. A bow tie formation crossover of the short, currently at 1051, short medium, currently 1044, and medium moving averages, currently 1031 3/4. The moving averages entered in disorganized, but they exited out in the correct manner. Thus, in theory, between the 15 to 20 sessions after crossover, we may see one or more of the following: a change in trend, a reinforcement of a trend, volatility. Hence, please look out for these three things between the 13th to the 20th of November. I should point out that the moving averages exited in a bullish manner as well. Chicago soybean meal. 29 weeks ago, I linked some of the early 2025 highs into a bright red, now broken downtrend, though it is still valid in another form, which I'll shortly explain. I also connected lows at the time into a different purple broken lower trend line. It's currently at 276.40. And together they made a January to August descending wedge pattern. This pattern was broken on the downside in late July, and in the process of breaking lower, the market made what looked like a small combined descending expanding wedge pattern, and at the same time a July to August reverse head and shoulders pattern. In mid-August, prices broke up through the neckline of this reverse head and shoulders pattern. Of this also combined neckline and upper trend line for the descending expanding wedge pattern, as well as up through the bright red upper trend line, the purple lower trend line, the short medium moving average currently at 284.60, and the medium moving average currently 281.40. Prices climbed higher and now entered a congestion zone over August, formed originally between April to June 2020, and they slipped through it quite easily actually later on, but at that time they were eventually stopped between 282 and 300 in late August, and that was by the combination of the overhead gold long moving average, currently 291.90, and the 50% Fibonacci line for the whole of 2025 so far at 294.5. The rise did not manage to meet the primary target for any of the patterns. However, all this activity saw a new pattern emerge, with the now broken bright red downtrend acting now as a lower trend line. In a mid-August to mid-October, initially a bear channel but then morphing into a descending wedge pattern, with a new, now also broken bright red mid-August to date downtrend, acting as the new upper trend line. 2 weeks ago, the market broke up through this new bright red upper trend line, pushing up and testing both the significant lows from earlier this year, centered around 290.80, as well as the now flatlining gold long moving average, and set currently 291.90. I asked this question last week, and I quote, "The question as to whether this attempt higher is a false break or not now seems moot, as we have made a clear break higher from the bright red descending wedge pattern. This action now gives a primary target X up in the 295 area and a secondary harder to reach target X1 up in the 304.20 area. In the immediate way beyond the gold long moving average, we have the 50% Fibonacci line for the whole of 2025 so far, as well as the late August high at 295.40. Plus we are still within the old 282 to 300 congestion area." And that's the end of the quote. This week we have gapped higher and motored after this gap, up through both target X and target X1, up through the October 21 low at 309.40, and reach what may be its first real resistance after the congestion area below, the dark blue trendline extension to the July to September 2021 descending triangle pattern, currently at 315.30. We have pierced this dark blue extension, but as yet we have not stabilized over it. This is important, as though this resistance is close to where we are, in fact we're just a little bit above it now, we have overhead two others that need to be noted. The first is easy enough, it is the high for 2025 at 326.60. Interestingly, around there we have some other resistances, which is probably why we had that high in the first place. Notably the 50% Fibonacci line for May 24 to July 25 move at 326.20, well it won't be that one. Plus there is some of a congestion at 326.90, it's probably that one. So that altogether they make an overhead congestion area between 326.20 to 326.90. Then above this is a 61.8% absolute Fibonacci line at 336.30. And I'll leave it at that for the moment. Finally, this commentary will not be complete without my discussing a portion of my commentary which I have repeated for 125 weeks, so close to 2.5 years. It is the annual key reversal seen here at the end of 2023. I said, and I quote, "I now need to remind you once again of my words when pointed out that Chicago soybean meal was about to have that rarest of patterns, an annual key reversal down. This duly came about at the end of 2023 and been living in the shadow of this pattern ever since," end of quote. I've also added ever since, and I quote, "There's only one thing you take away from any of my musings, that it have been those words," end of quote. For 2.5 years, the shadow of that pattern has darkened the skyline of this market. Could it possibly be that we are seeing the light of dawn stretching through the darkness? I'm sorry if I sound vaguely poetical, but this bearish long-term pattern has been such a cornerstone of this market for so long that it's hard to imagine a time when it may end, but end it must. One final postscript: with all these moves higher, we are set up for a monthly key reversal up in September, the first such since December 2024. Chicago soybean oil. With all the activity in the soybean complex, it was time I finessed this daily chart to show a better and clearer view of what is going on. Thus, the key pattern here is the newly expanded, sorry for the pun, the newly expanded dark blue April to date ascending expanding wedge pattern, currently at 50.59 to off the top of my daily chart. The lower trend line for this pattern has since late September a finessed nearby bright green uptrend. It's currently at 50.36. It is safe to say that the market has pressed down below both the dark blue lower trend line and the bright green uptrend. Indeed, prices today have pushed down and are looking at the gold long moving average below, currently at 49.54. And that is actually just below where we are now, or rather the low of the market today. Additionally, if you look at the daily chart, you'll see that since the peak of the market in late July, we have seen a new pattern emerge. Another wedge pattern, this time a bright red descending expanding wedge pattern, highlighted obviously in red, and is currently at 43.28 to 50.23. Since mid-October, we have seen prices push up over the bright red upper trend line, but stabilize and follow it down from above, and have formed a new, shorter purple downtrend, currently at 50.98. In this, the downtrend has been aided since mid-October by the green short medium moving average, which is currently at 51.23, and right at the start by the medium moving average, currently 52.47, when it capped the prices on the 16th of October. Now, on these patterns, I said this last week, and I quote, and this one is all coming to a cusp. You see the breathing space between the lower uptrend and the red downtrend line is becoming extremely constricted, such that by the end of this week, that's the end of last week, by the end of this week, it will have disappeared. Thus we have a cusp, and something will have to give way, and soon. At the same time all this is happening, we have other forces working on the market, notably the overhead green short medium moving average pressing down, and above the now disinterested medium moving average. Then below, not tested as yet but certainly influencing the market, is the rising gold long moving average. It all makes for some potentially quite exciting and dangerous prospects for the immediate future. End of quote. We have seen the result of the cusp happening today, with prices testing down towards the gold long moving average. If this gives way, the next support is the interesting 38.2% Fibonacci line of the March 20 to April 2020 move at 48.95. This halted the decline in late September, but I have my doubts as to whether it may do the same again. Below this, well, we really don't have that much until we start to run into the congestion in late May and early June, around 46.5 to 47. And to be honest, I don't think that will be enough.
Thank you for listening and watching this broadcast. This weekly broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and at the back of this broadcast. The copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final important bit.